We kick things off with another session that I think is going to touch on topics that are going to be incredibly impactful for you all. It will be a debate on mega trends in 2023. So with that, please welcome today's moderator, Nicole Valentine. She's the FinTech Director at the Milken Institute. Her guests, Perianne Boring, founder and CEO of the Chamber of Digital Commerce, Lorien, Gabel, CEO and co-founder of Figment, and Jalak Jobanputra, founder and managing partner of Future Perfect Ventures. And lastly, Rhine, head of liquid active strategies at our sponsor, Galaxy. Please welcome them all to the stage.
Good afternoon. We're here to talk megatrends. I love the topic megatrends. I just want to set the stage for our conversation. Megatrends are broad arcs of change that help us understand big shifts in the present, patterns emerging from the macro environment, powerful transformative forces that could change the global economy, driving forces that define the world today and tomorrow. And megatrends also gives us insights farther into the future. So we're on stage with the people who could best help us, one, understand megatrends, spot them, analyze them, and make strategic decisions and investments with these trends in mind. We have Perianne, we have Lorien, we have Jalak, we have Chris, experts in their own right, technologists, investors, policy power brokers, and institutional and operational experts. But I would say that the title that I would like to kind of hone in on is you all are entrepreneurs. And that entrepreneurial spirit is the vantage point that I think you need to have to build upon megatrends, spot them, and deliver on them. So let's get started with Perianne Boring. You're the executive director of Chamber of Digital Commerce, which is one of the world's largest trade associations representing blockchain industry. From your seat at the center of policy and the regulatory landscape, particularly in Washington, D.C., what megatrends should we add to our list?
Yeah, great question. So when it comes to the public policy for digital assets, the new trend is political theater. There's this issue, although we have fought really hard not to make this about partisan politics. We've tried to make sure when we talk about this from a policy perspective in Washington that we're looking at, technology, the economy, jobs, investment, innovation, not the left or the right. But you see that quite a bit. The biggest issues for our industry are just getting a regulatory framework for digital assets, having regulatory clarity so businesses can build and innovate and offer products here in the United States that are registered, that are regulated, that are in the confines of a regulated system. Given the issues, for lack of a better term, over the past couple of months, frauds, scams, grifters, all that stuff, it's really made digital assets a top priority in Washington. So we are very optimistic that we can actually get smart policy to move the industry forward. So that is the silver lining, is that this has moved up the prioritization rack in Washington.
Thanks, Perianne. We're going to dig more into that when I do my lightning round on megatrends. But I want to turn over to Rhine. You are the head of liquid active strategies at Galaxy, and you've made the transition from TradFi to the digital asset space. I think that wave of talent moving into the digital asset space is a trend in and of itself. But I'd like you to, I'll call you maybe a hybrid, because you know both worlds. From your vantage point, Chris, what trends should we add to our notes?
Sure. There's been a lot of good panels so far, and I don't want to duplicate what they've said. I think what we're seeing in trends in kind of the ODD side is going to be a big one for 2023. I think regulatory, which we'll probably chat more on, is going to be a big one. There's a number of other trends that we're seeing within the crypto space that I don't think have gotten as much airtime, and I should have cleared this with Lorien, so I don't steal his whole pitch, but staking is going to continue to be a bigger thematic, particularly as we get to the Shanghai hard fork in March. There's a lot of institutional investors that are looking at Ethereum and the ability to generate yield on that. But there's also this other aspect of the market that's been talked about a lot more recently, and that has to do with staking using a smart contract and getting a staking derivative out of that. And there's been this, there's belief in crypto that goes all the way back to algorithmic stablecoins and lower collateral-backed stablecoins about capital efficiency. And one of the things that I have my own belief on is that these liquid staking derivatives, while they're very novel in purpose, they can also be very dangerous. And one of the most dangerous things that we've seen in crypto is the irresponsible behavior of using leverage and derivatives to continue to compile on top of each other. And that then creates systemic risk when things start to unwind. So this is something that we're watching very closely in terms of, you know, the regular staking market, but also these liquid staking derivatives and how that can impact the market as well.
Thanks, Chris. We're going to dig more into that as well, also with the staking, but I want to turn to Jalak. Jalak, you're the founder and CEO of Future Perfect Ventures, a 10-year venture fund. You've been investing in the digital asset space before many of us were even talking about this industry. So I'd like to just hone in on your global eye, because I think that's very interesting in terms of trend watching. What megatrends have you spotted?
Yes, absolutely, and it's been interesting to hear Perianne talk about what's happening in Washington. But what I'm seeing globally is that Bitcoin and crypto assets are being more legitimized as an asset class. So you have Nigeria that had an outright ban on crypto just a few years ago, and they now have legislation going through their parliament to recognize Bitcoin and crypto assets as investment assets. And that is a sea change in a lot of countries where they've realized that they don't want this to all go underground. They don't want it to be banned. They don't want it to be pushed aside. Along with the fact that we're seeing CBDCs, central bank digital currencies, start to take hold in a lot of different countries. And I think that is also a way to make sure that a lot of these countries have retained some control. Nigeria rolled out a CBDC that has had very little usage, and I view their legitimization of other crypto assets as a way to potentially marry the two, and so they can get wider adoption of those CBDCs. India, China, we're seeing these regional currencies start to emerge, so that's one area that I'm looking at. Another is certainly the intersection of AI and crypto. That was part of our original thesis in 2014. Ethereum started off with the concept of smart contracts. Smart contracts are powered by algorithms and AI, and we're going to see better fraud detection. We talked about transparency, and all the reasons Bitcoin was created kind of lost sight of over the last few years with the fraud of FTX, just rebuilding the financial system instead of making it more transparent. So I'm seeing a lot of entrepreneurs work towards that goal.
Thanks, Jalak. Now I want to turn to Lorien Gabel, founder of Figments, the world's leading provider of blockchain infrastructure. I'm always fascinated with minds that build infrastructure. It's the world you create to build more worlds. So Lorien, what's on your megatrends list?
So I actually had more trouble with this question than I thought I would initially. This is my fourth company, and maybe I've barely gotten there. I've been right more than wrong, maybe, not even sure. So I wanted to see if I knew anyone, any public intellectuals, any experts that I could ask and cheat a little bit. And I got 3 quotes, which, if you'll indulge me, I'll read out, from Jim Cramer, Kim Kardashian, and Gary Gensler. So I'm going to read the quotes, and maybe when you think you know who it is, you'll shout it out and then stop me. The quotes are a little bit long. I'm going to read it super fast. When I've read the quote from one of those 3 people, maybe you can tell me who it is. All right, so if I had to pick one mega trend, it's got to be the growing focus on sustainability and ESG. It's a critical aspect of creating a fair and stable financial system. Sorry? One more.
Someone said Kramer
Gensler, you got it. All right. Listen, if I had to pick one mega trend, it's got to be the rise of passive investing. It's the big elephant in the room. Folks, it's changing the game, disrupting the traditional finance industry, making it easier for Main Street to invest. Got it, right? You don't want to miss this one on us, not that original. And then finally, so we know who Kim Kardashian, she was like, okay, so if you had to choose one mega trend, it would have to be self-care and mindfulness, et cetera, et cetera. Inside and out, right? It's about being present, finding balance, and just feeling good. I'm all about that. Okay, so those are the 3 quotes. These are super insightful in there. I'm actually in crypto. I don't really have any friends anymore. So I asked ChatGPT this question, and these were the answers given by ChatGPT, the AI. So I kind of, it's a lot of people have talked about AI. Kind of leave it up to you whether you think it's done a great job of identifying those people. I will have to say I asked its picks, and they weren't that original. They were like digital transformation, cryptocurrency and blockchain, more institutional adoption. There wasn't really anything like AI. Its first answer was AI, which I thought was kind of narcissistic, but okay. So the AI, like it's always gonna be like us. So anyway, I think it's worth considering about AI is gonna be one. Me in particular, I really agree with liquid staking and Ethereum. I think there's been, as Ethereum has made the transition to proof of stake from proof of work, and don't want to go into too much of the technical details, it really enables any ETH holders to participate in running the network like a miner, sort of. I think considering the last year and a half, what's happened with some riskier practices in crypto, it's almost going to be, when you stake, you participate in Ethereum, it's going to be the risk-free reward in crypto, I think. And so anything that has a higher reward rate yield than that is, you're going to have to ask yourself why that's the case. So I think staking is the one activity which over the last year and a half has proven itself as a legitimate activity. You're actually doing something, you're running the protocol, you're participating. So as an ETH holder, you can now run Ethereum and then share in the value created by that. And I think that's going to have a whole bunch of implications. So.
Thanks, Lorien. I want to get some debating going on here. I want to put some mega trends on the table, maybe get your points of view onto what you're thinking. I mean, jump into the think tank with me. I think tank every day, and I want to just see what you guys think about, what you all think about these mega trends. I'd love to start with regulation by enforcement versus regulators as partners.
Can I take this one?
Go for it.
All right. So I've been saying for a couple of years that, I don't know, what's the saying Winston Churchill had, that the Americans will do the right thing only after they've tried everything else? I think we're kind of there. We're trying a lot of things on the regulatory front. I was sort of having a constant rant that I would like them to do their jobs, provide a clear framework, one that protects consumers while at the same time allowing innovation. And I really think there's been an absence of that, but maybe we're inching forward to it in a hopefully constructive manner. I think we're going to get a lot wrong, but we'll sort of limp our way there. But I really would just implore the commission, the commissioners, the regulators to engage with the industry, do your job, get off TikTok, stop tweeting, and actually make some usable regulations for people.
And not just regulations, rulemaking.
Yeah, you actually have one job, which is to make rules.
There is a difference between issuing speeches and statements that is not binding. So that's a big problem, particularly for the staking community.
Yep.
Because Ethereum or Ether not being a security, we only have that in a speech from a previous administration that this newest administration isn't honoring. So we need rule making. And until we see that, we're going to continue to have regulation by enforcement. But on the state level, there's a lot of interest from policymakers across the state. Your home state of Wyoming, incredibly forward-leaning, that is partnering with digital asset entrepreneurs.
Gary Gensler says X is not a thing. Like, any more than I say X is a security is not a thing. Like, there's a commission, there's a rulemaking process, they should do that.
Well, Perianne, I was just going to ask, because you've been in the regulatory space since the beginning here, how much do you think the state regulations matter on the federal level?
They matter a lot. I mean, so much so that they've been kicked out of DC. The feds are actually, I think they're scared of the state regulators. So if you, like, in the US, just talk about stablecoin regulation as an example. there's really only one or maybe two entities that are actively regulating stablecoin regimes. That's New York's Department of Financial Services and Wyoming. That's it. Nobody else
And they're
actually
at different extremes.
has experience
Right.
in the weeds looking
Yep.
at stablecoin arrangements. Well, what is Congress doing? So last year, the House Financial Services Committee worked on a piece of legislation. They never actually introduced it, so you never got the benefit of actually being able to read it, but if you're part of the circles, you may have been given a copy. We were, and they want to preempt the states. And then the states weren't even invited to be a part of the conversation. This is a dangerous precedent. Typically, the states go first. They're more forward-leaning. They can kind of get out ahead. They learn, and then they use that experience to inform federal policymaking.
Well, I am hoping that what we're seeing on the international level is going to, get these legislators, off their butts and realize that, I mean, just at the World Economic Forum, right, there was a consortium of stable coins and digital, and again, this could be just performance theater and just announcements, but the fact that there are all these regions and countries that are looking at digitizing their currencies, and that can provide a real threat to the US and trade, and at a more macro level, I'm hoping that the US will act. I feel like, as an outsider looking at the legislative process, it feels like at a standstill, but hopefully it won't be.
Chris, you want to weigh in before I get to the next one?
Yeah, there is a couple individuals within the SEC and the CFTC that are supportive of crypto regulation, but unfortunately, they're just the vocal minority. And you hear from them that they do want to partner with crypto companies and those in the industry to help build that regulation and that framework out. But the fear is that the second that you go to the SEC and try to work with them, that you walk away with a lawsuit because you're operating in so much gray area right now. So it's kind of like, a chicken and egg right now until there is some kind of a framework that can be in place. But hopefully that minority's voice continues to grow and we can see some progress.
I'm going to put another megatrend on US dollar dominance versus global currency paradigm shift.
I actually think there can be both.
Go for it.
I think there can be both. I think Bitcoin and cryptocurrencies can coincide with a digital dollar if that is the will of Congress. We see, Bitcoin really being a global store of value, not a transactional layer. Stable coins can be that transactional layer. The stable coins could be a government-issued coin. It could be a private sector-issued coin. It could be a partnership between the public and private sector to bring a digital dollar to market. So I think it's actually possible they can coincide, and I think that's actually a more productive conversation to have with regulators, because going against the Federal Reserve is not a realistic business strategy. Just throwing that out there.
I think stablecoins, here's a prediction, probably won't happen, but maybe, is that blockchain, which is a disruptive technology, I think we've seen what happens when you layer traditional business models on a disruptive technology. If you take stablecoins and maybe there's a couple big pockets of monopolistic money, rent-seeking available, let's look at the credit card fees that are charged by two companies or two organizations, depending on how you characterize them. And I think you're going to start to see blockchain, stable coins. There's no reason you need to pay that interchange fee for buying a coffee. There's no fraud. There's no fraud when you buy a coffee. So I think that maybe what we're going to see next year is actually starting to see stable coins. Someone with their app on their phone who has a bunch of consumers will start using that as payments rather than the credit card networks. And so I think that's one potential large trend and area of disruption.
And that's where the interoperability can come into play. But there have to be some global networks that get rid of the current intermediaries. And the challenge is not replacing these intermediaries with other intermediaries, but really utilizing the technology as an instant transfer mechanism, secure. And the other element, which doesn't go exactly to your question, but is zero knowledge proofs and the technology that's really developing behind the scenes to offer some privacy potential in some transactions, and that's where we're also investing heavily in, because different countries have different perceptions of privacy or what is expected out of their populace, and making sure that as you have that interoperability, you're also allowing local needs to be met on the privacy front.
I'll link this back to the regulatory question. Is right now the dollar is essentially the reserve currency of crypto. Everything trades with a US dollar stablecoin pair. Circle does have a euro stablecoin, but it's tiny in comparison to the dollar. So it would be a real shame to see policymakers and regulators actually push this to be a different currency that's backing crypto, and a huge lost opportunity if they just continue to operate in the current framework they are.
Hopefully I can put some more megatrends on the table. Technology as an enabler versus technology as a decision maker.
I'm scared of technology as a decision maker personally. I read a lot of science fiction, and that tends to be something that can veer off sides very, very quickly. I think as an enabler, it's fantastic. Technology over the past 30 years, just with a microprocessor to a mobile phone, it's enabled us to be so much more productive in what we do. And when you think about blockchain, it's about improving productivity. It's about shortening settlement times. It's about taking out 3 different hops to get from point A to point B and making it just one hop. And for me, that's kind of the opportunity in blockchain, is to be an enabler of making things more efficient as opposed to making decisions.
And I think adding in that, as you look at decentralized networks, I always think about smart nodes, where every person, every entity, no matter how big or small, can contribute as well as participate from an economic perspective. So that's where the enablement really comes in. Now, I've been in AI. I've been investing in AI for over 20 years, and I can say, a lot of people are talking about it. I've been excited about it for many years, but all you have to do is type something into Chat GPT and know, we're still not at that decision-making level.
Not yet ready to welcome our digital overlords. Not yet.
I'm sorry?
Not yet ready to welcome our digital overlords.
Yes, so I'm a little bit more optimistic on that front, where if we have enough people participating and utilizing new technology as an enabler, we'll stay ahead.
Well, this is to the point of why it's essential that the global competitiveness, why the US leads and encourages our private sector to commercialize advanced technologies, so they're built here in the United States with American values, like privacy, freedom, at the very core tenet of that. You mentioned zero-knowledge proofs. Being able to control your data and your identity in a digital environment, I think, is a human right. It needs to be baked into the technology from the beginning, so we don't run into these Orwellian, nightmares that are absolutely possible.
I want to get one more on the table if I can. Competition for digital power and dominance of tech giants versus a fair digital world and rules for the data economy.
For me personally, the reason I got into the blockchain space was that I think we all sort of feel that our digital stack, or the internet, there's something a little bit wrong with it. It's too centralized. People are doing things with our data. There's financial rent seekers, and my perspective is that this technology, we're not anarchists. We're running a business, but this could be a counterbalance to some of the tech giants, et cetera, who we really don't know what they're doing with their data. There's only 1 or 2 choices. So I really see this as a counterbalancing technology. I'm optimistic in that regard. Again, I don't think we need to tear down the system, but we need something which gives people options besides 3 or 4 companies.
We have some more time. Does anyone want to jump in there on tech giants versus rules for the economy?
Well, I think there's cycles of time, companies, power, and we talk about late-stage capitalism. Look, I'm a venture capitalist. I believe in the power of capitalism, but it may take a different form. And I think blockchain technology and broader access to participation, investing in different types of assets. I was born in Kenya. I've spent a lot of time on the ground with people, who haven't gone to school, but who are very capable, and they just haven't been able to participate in the economy. If we're able to use this technology to allow them to credential themselves, have access, verification, and then also get economic benefit from their skills, I think we'd all be better off, but it's a hard thought process for people to change. It's so radically different than the way we operated previously.
I don't think we'll get rid of the tech giants. I think they're actually going to be players within crypto and blockchain, but instead of them having 100% of the control, it's going to help bring that a little bit more to the consumer. But I don't think we're going to get rid of them anytime soon. So it's going to be a more equitable mix of ownership as opposed to them owning everything and us as the users nothing.
Decentralization is the future. It's why we're here. It's what we're advocating for. This is what Satoshi invented. It was solving for the double spend problem so people can own and control their digital assets.
Well, you heard it here, everyone, the Megatrends panel. Thank you so much. You all were amazing. Appreciate you.
Thank you so much.